Good morning, everybody. Just wanted to talk with you today. I know that tariffs are back in the news, and while politicians might be debating whether this is going to help or hurt the economy, one thing is clear: this is going to impact all of us, every American consumer, investor, and apparently penguins might feel this impact. So, yep, some of the countries across the board were slapped with a minimum 10% tariff, including some uninhabited islands. So, not to make a joke of this, but this was a very big move. And so I feel like there might be some, some really, today might be a very tough day in the market, but then I think there is going to be some room for negotiations and maybe some changes. So, but this tariff announcement came out bigger than anybody, most economists expected. And so it is going to definitely have an impact on a lot of different things. So I want to break down how it's going to impact you, some of the things we're doing here at Soundview, and then other things that you might want to do in this time to, protect your money, career, all of those things. So first of all, just want to explain what a tariff is. A tariff is essentially a tax on imported goods. The idea is to make foreign products more expensive, so companies have more incentive to manufacture in the United States. But the catch is that these costs are going to be passed down to consumers. That's going to mean that we end up footing the bill at the checkout counter. So I think that, we are going to see initially, we're going to see a pretty, anything that's coming from another country, imported cars, if German beer, Irish butter, all of these things, video game consoles, these are going to get at least 10% more expensive, if not more. The hardest hit was to China. And so this is something, where a lot of our goods and products come from. And so this is going to be a pretty big impact, at least right out of the gate, on some of the things that we consume every day. So how it's going to impact our wallets is basically everyday prices are going to rise. Groceries, clothing, electronics, cars. Get ready to pay more. And so some things that we could do potentially is kind of look at what we own right now. Maybe we're more mindful with our spending for a little while. Maybe we look at things. Groceries have been expensive for a while, but things like, clothing, electronics, keeping your car, getting a new car is going to be expensive. If you've been in the market for a used car, the tariffs will not impact that. But parts to fix our cars to keep them running and on the road are going to get more expensive. So we might need to adjust our budget to kind of understand that is going to be a direct impact to most of us. Gas and utilities could climb. Tariffs on raw materials like oil and steel can trickle down into our monthly bills. And that these companies are going to pass these costs on to us. Businesses rarely eat the extra expenses. They pass them down straight to the consumers, especially the large businesses. I know a couple small businesses might be trying to keep things going, might be eating these costs as their goods and everything that they use get more expensive. So, but for the most part, it is going to come back down to us. So I want us to think about how we can, protect our expenses and our savings and our finances. So one of the things would be to boost that I'm doing personally is boosting my emergency fund. I feel like costs are going to rise. I want to have an extra cushion in my savings just because it'll make me feel better. And I think that, it's important to look at that. And that's something that we can look at when we do financial planning work to say, okay, like this feels, maybe having a certain amount in savings felt fine when, the economy was kind of rolling. There was no, jobs and things like that felt stable. But if you feel a little bit of pressure or stress, sometimes having money sitting in a high yield savings or money market or somewhere where it's kind of there when you need it is helpful mentally to have that. Trim back on unnecessary spendings. I would really love to get a new car, but I'm not sure if it might be more worthwhile to do some repairs and keep that car on the road at least for a couple more years or until I really need to. Stock up on some essentials if you want to. I mean, goods are going to go up in price. If you do, there's a new Costco down the road from us here. If you're living in Massachusetts, in the Walpole area, some of these things that we could potentially buy them now if we know we're going to use them and need them. And also working on paying off high interest debt. Interest rates are still high. The costs of, the rising cost of everything is going to make that harder to manage. So, try to, tackle debt, have a plan for it now if you can. You don't need to start extreme couponing or canning your own food, but a little planning can help us with these headaches that might come later. When it comes to protecting your career and your income, I've talked to a few people now who are feeling a little bit more nervous about employment, or maybe they've been looking for a job for a while. It never hurts when you have if you want to do something, if it feels like doing nothing feels terrible, things you could do, you can update your resume, you can update your LinkedIn, you could strengthen your network, you can reach out to former colleagues, industry contacts. Don't wait until you need a job to start networking. This is something that you can always kind of add in if you are still working and you're, still in that income earning phase of your life, also expanding your skill set. I've talked to some people who've, put some of their budget towards investing in a new skill or a course or a certification. That is always something that you can, do when you are looking to take some action and have some control that could help you in the future. And then also, second income streams can be a game changer. Some people have talked about, wanting to work part-time or other things like that. I think that can be something that's always going to help the financial plan if you're able to do so. More income will always turn it green, as you've all seen when we've done some planning work. So, and then finally, I want to talk about what we can do as investors and what we're planning to do here. First of all, you are going to see a lot of headlines saying that trillions of dollars of wealth have been lost in one day. These are shock clickbait. They want to get eyes. They want to get attention. So you are going to see that. But I want everyone to know that we do not lose this money until we lock in those losses, until we sell. And so I think it's important, I'm not just going to say, stay the course, do nothing, because I feel like that might not feel right. But I would say, watch the amount of news you're consuming. If you're feeling panic, if you're feeling anxiety or fear and it's getting to be overwhelming, reach out. Let's have a phone call. We could talk about where you are, your unique situation, how much it costs to be you, and figure out, if we're still on the right path and we just need to, maybe make some tweaks, or, if we do have some things we need to address, or if everything will be okay. But there's going to be a lot of clickbait. There's going to be a lot of red on the TV today. And there's a lot of people who are going to have certain opinions, and they really want to get your eyes on those articles. But I do think that we are going to stick mostly to our investment plan. We have diversified portfolios. Every client that's working here does have diversification. We have some people with high levels of individual stock positions due to employee stock ownership and things like that throughout their career. We will work with you to manage that, to make sure that is still on track, but also the rest of your portfolio will be well diversified. But there could be some buying opportunities here. We might look at moving into, rotating into some more defensive sectors like utilities, energy, consumer staples, commodities, even real estate investment trusts, things like that, that could be now if US growth does not see the same numbers that they have for those big tech companies or other sectors, we might be able to look at other areas where there could be opportunities, there could be good pricing, there could be some positive valuations. And so I do think that if you see some trading and activity, know that that's what we're doing. There might be some moves that we make. We will still be invested in the United States. We will still be invested in tech and growth. I don't feel like those are going to be sectors that ever disappear. I don't think we're going to go back to a manufacturing country that, doesn't look at cell phones anymore. I just feel like that's going to be a very hard genie to put back in the bottle. But I do think that there could be some opportunities. If you're somebody who has been sitting on the sidelines with a lot of cash, wondering when the time to invest would be, a whole lot of things went on sale. I'll just say that. And if you are still investing in your 401k or you're making those weekly contributions, keep doing it. Keep doing it, because this is going to be a tough time to get through. But a lot of wealth is built in recessionary, inflationary times. Don't know if we'll actually be in a recession at some point, but I do think that there is always somebody who is making money. There is always somebody who's winning. There is always something that would be a good investment. So we might make a couple of tweaks. We might beef up some of our sectors that we feel like will do well. Same way that we did, during COVID, things like that, where we just kind of adjust. This is the world that we're in. We have to kind of take all the information that we have with us and make the best moves for today, knowing that that could be different in a year from now, which is why we have that ability to change the portfolio and move around into different sectors. And I think that markets have weathered tariffs, recessions, and financial crises before. A lot of you have lived through them. And so it's really smart for us to just kind of work through this, get through this, and not panic. Try not to panic. I know it's hard to say, but try not to panic. At the end of the day, these tariffs are going to create some economic waves for us. We don't have to let them sink the boat, though. I think things you could do: adjust your spending, you know, be mindful of your career path and some of those opportunities you might have. We stay smart in the market. We're going to look for some opportunities. And, if you want to talk about your particular situation, your financial plan, I am always here for you. And I'm happy to get on the phone or get on a Zoom call and talk with you about it. And I just want to, make sure that everybody knows I'm watching everything, that we are going to make some moves, and that I'm definitely very, very aware and conscious of what's going on and want to make sure that you are safe and protected in any sort of economy. So thank you very much, and I'll talk with you soon.